Personal Finance Guru G, spreading financial literacy. Analyzing the impact of bank failures on the Nasdaq Composite Index. Lessons learned from the last 5 incidents. Hello everyone, and welcome to this video on analyzing bankruptcies and making investment decisions. Today we'll be taking a look at the Enloe State Bank, Washington Federal Bank for Savings, Guaranty Bank, First NBC Bank, and Trust Company Bank, and analyzing their 1-year, 3-year, and 5-year CAGRs, compound annual growth rates, after their respective bankruptcy dates. Enloe State Bank. Starting with the Enloe State Bank, which declared bankruptcy on May 31, 2019. After the first year, the CAGR was 8.8%, and the 3-year CAGR was 15.8%. While there isn't a 5-year CAGR yet, this is still a promising trend for potential investors to consider. Washington Federal Bank for Savings. Moving on to the Washington Federal Bank for Savings, which declared bankruptcy on December 15, 2017. After the first year, the CAGR was negative at -3.9%. However, the 3-year CAGR was 15.9% and the 5-year CAGR was 16.3%. This shows that while the short-term results weren't great, the bank has recovered over the long term. Guaranty Bank. Next up is Guaranty Bank, which declared bankruptcy on May 5, 2017. After the first year, the CAGR was 16.0%, and the 3-year CAGR was 18.6%. The 5-year CAGR was 16.3%, which is consistent with its 1-year trend. This shows a strong upward trend in the bank's performance, making it a good consideration for potential investors. First NBC Bank. Moving on to First NBC Bank, which declared bankruptcy on April 28, 2017. After the first year, the CAGR was 6.5%, but the 3-year CAGR was -4.6% and the 5-year CAGR was -5.6%. This demonstrates a downward trend, making it a risky option for investors to consider. Trust Company Bank. Finally, we have Trust Company Bank, which declared bankruptcy on August 21, 2015. After the first year, the CAGR was 5.2%, and the 3-year CAGR was 11.3%. The 5-year CAGR was 15.2%, indicating a strong upward trend over the long term. Conclusion. In conclusion, analyzing CAGRs can be a helpful tool for investors looking to make informed decisions about bankruptcies. However, it's important to remember that past performance is not indicative of future results, and there are other factors to consider such as market conditions and economic events. As always, it's important to do your own research and consult with financial professionals before making any investment decisions. Learning, never try to time the market, rather spend time in the market. Thanks for watching, and I'll see you in the next video. Please like, share and subscribe our channel.